you might see opportunity for 100 plus chains in the next year or so?
Yeah, for sure. I mean, I think Matt hits it spot on. I think so far the Avalanche journey has been 0 to 1. Let's prove out in a world where everyone says monolithic scaling is the only way that's successful for any app because everything needs to be Lego blocks and etc. Like nothing, there are only 6 core functions of a blockchain and all of them line up to asset swaps, essentially, like secondary markets, DeFi. I think in the past 2 years, like Avalanche has really proved like, no, there's very serious product market fit around having your own block space and your own execution environment that can interoperate with others.
Hello, everyone. Welcome to the quarterly Avalanche webinar with Token Relations. I am the co-founder of Token Relations, and this episode is the 4th quarterly call we've done with Avalanche. Joining me today is GoGoLabs founder Steven Gates, Avant founder Rhett, Shipp, and AvaLabs Senior Ecosystem Growth Associate for DeFi, Matt Schmenk. Matt, that's a long title.
Yeah, honestly, my title has moved around quite a bit the past 3 years here at AvaLabs. So originally I started as, I think, a BD associate, and we kind of had some changes in relation to like what BD is compared to growth. And so I changed over to like being a growth associate about 1.5 years ago. And since then, my title has been growth associate, and then I guess the senior part locked on as well, which is kind of a mouthful.
So, Senior's not that bad.
Yeah.
Amazing. Well, welcome guys. I'm excited to talk to you all today. Rhett, Steven, lots of developments on your end too, but welcome to the recording, and I'm excited to talk with you guys.
Yeah, happy to be here. Thanks for having us.
Yeah. Before we get started, I also want to remind listeners that we will do Q&A at the end. If there are some great questions from the ecosystem and community, feel free to leave them in the comments. I'll remind you guys throughout the call. But with that said, I want to start with some background and context for listeners. Avalanche, which is the primary network of the blockchain, currently has about 48 active L1s. This past quarter, we've seen a number of developments for A1 capabilities on Avalanche, protocols and chains being launched for institutional uses such as enclave markets, fully encrypted exchange, and inversions L1, as well as the launch of Avant stable value token, which we actually recently covered in one of our weekly newsletters, and we will dive into in a bit, I'm sure. With that said, we are kind of nearing the end of Q1, and in the last Avalanche webinar, we talked about Avalanche 9000 upgrade and how it can lower fees while also increasing flexibility, among a lot of other things. Since then, Matt, we could start with you. How have things been? What was the feedback you heard from users and projects building on the network?
Yeah, so as you might know, ACP 125 lowered the base fee on the C chain from 25 enavox to 1 enavox. That basically made C chain roughly 95% cheaper for users. And with that, I think we've seen kind of an abundance of developers now no longer thinking that they might need their own Avalanche L1 to really start, meaning they can kind of bootstrap their protocol on C chain first, just because it's already so cheap. And then eventually, if they gain more product market fit, they can migrate over to their own Avalanche L1. Also, we've seen a pretty big uptick in number of unique active addresses as well as transactions on C chain. I think that's kind of been in combination of a couple of reasons, ACP 125 being one of them. But also we've seen, I guess, a little bit more like degen activity. So we've had roughly like 4 or 5 different meme coins launched on Avalanche. And there's this new meta where it's basically ShameFi, in which there's a board of everyone that gets basically put in terms of these pre-sales for the underlying meme coins. And if someone sells more than 50% of their pre-sale, they get put on the shame board. And that's so it's a fun, exactly. So it's a fun new meta that has really seen kind of an uptick of activity within our ecosystem. Also ACP 77 took away the requirement for validation of the primary network for Avalanche L1 validators. And so that makes it kind of cheaper from an upfront CapEx perspective for a lot of L1 developers. Teams like GoGoPool already had mini pools and kind of other ways to bootstrap validator sets without that requirement. But with that, I think also it opens the door for regulated entities just because they no longer have to validate a permissionless network, which sometimes their compliance teams don't allow them to do. And so we've seen quite a bit, both on the kind of L1 front, but also the C chain front regarding Avalanche 9000 and the upgrade that went live pertaining to it.
Mm-hmm. Yeah. And then for Steven and Rhett, both of you are building on Avalanche, right? What do you think of the recent developments and what's being done maybe on like the right path to kind of accomplish this goal of being a go-to platform and network for, app chains, among other things?
Yeah, I think on our side, so our fundamental view here is that to bring the whole world on chain, that's not going to fit on one single chain. So the Avalanche architecture is already very well set up for it, where anyone can have these interoperable app chains or interoperable L1s. So you can have many chains that all feel like one, and they're all super high throughput. What we're really focused on now in Q4 was the large AVAX upgrade, the AVAX 9000 upgrade. So that actually started making it feasible for people to start experimenting with and play with. So what we're really focused on now, just as a group, is to really drop the cost of launching an L1 by about 100x, and then increase the profitability of running and maintaining an L1 by another 100x. Because once you get down to that level, then suddenly, it's a no-brainer to launch on this architecture. So our first step on that, we focus on the profitability side. In the end of Q4, we helped Beam with their node sale. So they ran a $70 million node sale. And that was them transitioning their existing, on the old architecture, a subnet to a more permissionless, decentralized L1. And that really proved the appetite for people of people in crypto still care about decentralization. Even though meme coin season and casino season, crime season is going, most people actually still really, really care about what's going on with crypto and the future of blockchain. Then our second step is great, we proved out the monetization. Now let's prove out the technical aspect and the cost effectiveness of this. So we just launched Cocknet, which is the OG biggest community coin on Avalanche. And then we were able to onboard, in the first week, we onboarded 200 validators. And then in 6 hours of the last week, we onboarded another 1,000 validator nodes. And that's coordinating across a fleet of decentralized node operators, the full tech stack figured out for everybody, building on top of our abstraction layer. And then to an end user like yourself, Jacquelyn, all you would have to do, all technical complexities have been abstracted away. All you have to do is show up with your COC tokens, click, 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 boom, hardware spun up, and now you're actively validating and securing a new L1. So what that really proved out for us is great, we just dropped the cost of launching an L1 by about 100x because decentralization was by far the biggest economic and security concern for every L1. And now we're going to continue to iterate, and we have a couple of launches upcoming that we'll be focusing on to push this even further.
Dropping it 100x, where does that bring it price-wise?
Right now, it's around $1,000 a month on our stack, which even if you compare that to L2s, I think the cheapest L2 service is $5,000 a month. And then you're giving up the cost, or you're giving up the benefit of decentralization. But yeah, so I still think that needs to come down another order of magnitude, quite honestly, because then for any smart contract protocol that needs any sort of high throughput and scale, it becomes literally a no-brainer. You're losing money if you launch as an L1.
In terms of the hardware, what are you guys using on the back end to spin that up? Are you guys using bare metal or AWS or Azure, or how'd you get the cost down on that front?
So GoGoPool is a decentralized staking protocol. So our protocol, we've just defined out the rules of what types of hardware are allowed to join into our decentralized hardware fleet. But the way that happens is that a node operator comes along, they take a test with us, they provide an economic bond staked in GGP tokens, and they're responsible for sourcing their hardware. So when working with these node operators, we've heard, a lot of people have their own bare metal stuff. Some people use AWS, Linode, Alibaba Cloud was brought up recently, Azure, some people are using. So it's really, a lot of people are running their own hardware. It's pretty spread out.
Yeah.
Makes sense.
Rhett, for you and Avant, how do you kind of look at the recent upgrade and like what role it plays for the business and growth?
Yeah, good question. So reduce costs on C chains definitely helpful for DeFi, I think. And I think, so just for my perspective, I'm ultra DeFi focused. That's kind of my area of expertise and where I've operated my entire life in crypto. For the app chains, I think one of the biggest opportunities in that world is there are certain applications that really need a lot of control over their costs and throughput and execution, et cetera. We've seen that with Hyperliquid, which is the biggest perpetual exchange in DeFi that is its own chain. I think there's a ton of opportunity there for certain types of applications, especially derivatives applications in DeFi, to have their own chain and have more of that control over cost, throughput, et cetera, and choose their trade-offs with respect to decentralization. Some chains care a lot, some don't care as much. Hyperliquid, for example, I think they don't care as much about that, so they only have, I think, less than 10 validators. Last I checked, I could be wrong on that, but I think there's a lot of opportunity there. So that's one thing that I expect in the future is, if you look 5 years out, I think within DeFi, the applications that are most likely to have their own chains are derivatives platforms and other things that care a lot about throughput and cost.
Mm-hmm. Yeah, that would make sense. I could also see that with gaming as well, with like transactions, high throughput, et cetera. I've also noticed that the Avalanche community and developer activity is expanding. I think, as users and developers are coming in from other blockchains or just migrating to Avalanche's tech entirely, what do you all kind of think is causing this expansion? You're building in this ecosystem, you operate in this ecosystem, right? But what would this transition into Avalanche kind of mean for the developers and the broader chain's growth?
Mm-hmm. Yeah, it's interesting. I think Rhett described it well, in which like Hyperliquid is right now the number one perpetualist DEX in all of blockchain, and they chose to use their own sovereign blockchain stack rather than building on a permissionless L1 like Ethereum mainnet, Solana, Avalanche chain, etc. And with that, I think over time we've seen more and more successful dApps not want to have value leakage to other like tech stacks. And so DYDX is kind of who I always think of as the first mover for this example. They went from, I believe it was Starknet back in the day, or Starkware, to then building in the Cosmos realm. And so they built their own app chain using the Cosmos SDK and kind of pioneered the way for teams to build their own app chain. And I've personally always subscribed to the thesis of scaling horizontally via app chains. And it feels good getting a little bit of gratification, seeing something like a uni chain take place, in which Uniswap, a dApp that was kind of pioneered on Ethereum mainnet, migrating over to their own, at least, sovereign rollup. And this is something that I think it like reiterated that successful dApps are going to have their own sovereign environment, whether that be rollups or app chains or something like that, once they gain like certain product market fit. And so I think people are realizing that Avalanche has kind of the best tech stack for building one's own sovereign L1. And we're going to see a proliferation of new L1s launching here in the next year. I know Steven and the GoGoPool team has like a pipeline of a couple hundred L1s. And I think we reached a point where we have the needed infrastructure to really hit like critical mass. And so Avalanche interchain messaging launched, and ICTT, which just stands for interchain token transfer, which allows for basically permissionless messaging between these various Avalanche L1s. And it's right out of the box rather than having to go to like a layer 0 or an Axelar and getting them to deploy an endpoint to those Avalanche L1s, which is pretty costly, actually, a lot of the time. And so it allows for much cheaper costs to have kind of a singular composable network that feels like maybe a singular chain, but everyone being able to run on their own sovereign stack and having control and full customizability of that sovereign stack. And so I think we're seeing a lot of great permissioned as well as permissionless use cases with Avalanche L1. But the point has come where we have all of the needed infrastructure and can really step on the gas and go from like 1 to 10 rather than 0 to 1.
Mm-hmm. Yeah. Steven, what's kind of your take on that? Matt mentioned that you might see opportunity for 100 plus chains in the next year or so.
Yeah, for sure. I mean, I think Matt hits it spot on. I think so far the Avalanche journey has been 0 to 1. Let's prove out in a world where everyone says monolithic scaling is the only way that's successful for any app because everything needs to be Lego blocks and it's like nothing, there are only 6 core functions of a blockchain and all of them line up to asset swaps, essentially, like secondary markets, DeFi. I think in the past 2 years, like Avalanche has really proved like, no, there's very serious product market fit around having your own block space and your own execution environment that can interoperate with others. And in the journey of any, fucking paradigm changing startup or company, it's a 7-year journey. So I think we knocked out the first 2 years, and then now the next 2-3 years is going to be all about blitz scaling. Like, all right, now that the tech is there, it's time to commercialize. And I think that's where we're seeing most of the builders are very, very, not even just the builders that we're seeing, but I'm having political groups hit me up as well of like, hey, we see what's going on with Kent and Wink. The ShameFi stuff looks really interesting, but we need our own L1. How do you think we can, also create a really strong community in our target demographic, but be able to still have our own kind of like landmark blockchain that can flow everything to. So I think it's really interesting. And I think it's going to be, of course, we're working really hard as well on what's this meta going to be. But I think as that meta develops, it's going to be, there's a lot of launches lined up. That's for sure.
It's exciting. Yeah. I think also to what Matt was saying about like Uniswap's Unichain and Rhett brought up before Hyperliquid, we're seeing a large migration toward app chains with major players like the two of them, as well as like Kraken and other networks kind of launching to better cater toward their needs while also making like these customizable L1s, right? What do you all think is kind of driving this shift and this proliferation of chains? And then with Avalanche's infrastructure, I think we've kind of already touched on it, but like, how can that kind of support it in a way that maybe other networks hasn't?
On the DeFi side, so a few of these got brought up. So you have Hyperliquid and Uniswap that are both a lot of volume, throughput and cost matter a lot. So if you look on Ethereum mainnet at like top gas users, Uniswap has been like at the top of the list most of the time. So it's like, okay, they drive a lot of traffic. Hyperliquid, those sorts of applications are they need really good cost and execution and those sorts of things. So having some control matters. On the other side of DeFi, there's so CDPs like MakerDAO, collateralized debt protocols. They tend to be pretty low velocity. So the speed of the chain doesn't matter quite as much, and throughput matters, but not a ton. But if you look at MakerDAO's endgame, they plan to have their own chain. Last I checked, and the reason for that is they want to be able to have some control over, censoring exploits. Now, some people have different views on that, but for them, they're like, okay, if we took a big bad debt because some entity like North Korea found an issue, they want to be able to block that. So that's like another reason why some apps may want to have their own chain, have more control there, just from kind of that DeFi risk perspective. I think so. Yeah, for the DeFi protocols, I think those are the two, the two big reasons. You either need a lot of speed and control over cost, or you want to have control over, managing things like bad debts, et cetera.
Mm-hmm. And I think that. Oh, go on, Steven. You got this.
Just last little point, and then back to you, Matt. And I think if you play that trend out, you're looking at literally every single successful DeFi app will be migrating to their own chain. just because it just costs them more money to not do so, and it's riskier for them to not do so. That is, when we get to that level, that's more in terms of building real shit category. So that's going to take 7 years, right? Like think of like MakerDAO. I think of people like Aave has also floated out like, hey, we're going to launch our own chain. But I just think that's a really interesting trend there. Sorry, back to you, Matt.
Yeah, I was just going to say, like, most L1 builders are building L1s because of like a specific attribute that they need that L1s can solve, whether it be compliance reasons such as permissioning, whether it be low cost or high throughput or low latency, etc. Once they find that like singular attribute that's only solvable having their own sovereign L1, that's when they generally decide to build one. Dexalot is another great example that we haven't brought up yet of spot central limit order book Avalanche L1, that they're actually one of the first users of Avalanche interchain messaging. And it's really showed the capabilities of when you have a network that has very fast messaging capabilities. I think it's generally under 3 seconds for each message. It then just feels like a fully permissionless, singular kind of monolithic network or chain. Because users don't even know that they're interacting with multiple blockchains. Dexalot allows for users to swap directly on the C chain, basically using their order book for pricing as well as asset swaps on the back end. And then it directly bridges to and from Dexalot's own chain back to the C chain and allows for users to swap between assets. And I think that's like one of the coolest use cases in which it's like fully permissionless, but it feels like you're using a single chain.
Remember trying to move your assets between chains, watching the minutes tick by, wondering if your transaction would make it? Yeah, we've all been there. But here's the thing. While other bridges feel like taking the scenic route, Across is your express lane. Base, Arbitrum, Optimism, boom, boom, boom. Your assets move between them faster than you could say cross-chain. Across isn't just another bridge. When Uniswap needed the fastest, most reliable way to move assets cross-chain, they chose Across. Now, millions of Uniswap users are swapping between chains without even thinking about it, because that's how it should be. Whether you're moving assets yourself or building the next big thing in crypto, Across makes cross-chain feel like the same chain. No more scenic routes, no more complexity, just 2-second transfers between chains. Ready to join the express lane? Head to across.to and experience what bridging should have been all along. Yeah. I mean, that was going to be one of my questions too, is like, as fun as it is to have a bajillion chains, if you can't like transact across them in an interoperable way that doesn't feel extremely fragmented, it's going to start looking like another chain that starts with E.
I have an interesting thing on that. I think Avalanche has already solved it and the UX is being built up by users. So 2 proof points here, just in the last 2 weeks. One for Cocknet, to create a Cocknet validator node to validate the L1 and spin up the hardware and stake. They're staking contracts on their L1, so everything is still very L1 focused. But for the user experience, we just built out the infrastructure where someone has to go to a C-chain smart contract, click a button, your money is staked, and then using the warp messaging under the hood, using the relayer system under the hood, then that talks to the L1 and registers you as a staker. So suddenly that looks really good, and this is going to be replicated by every single L1. Then second proof point, again, Cocknet team, they are launching, one of the very first dApp launching on this L1 is a memecoin casino. It's like a memecoin slot machine. And they also specifically borrowed, we open source a lot of our technology. So they borrowed our tech, and then now they're also replicating it for playing entirely into the memecoin casino. So to do any interaction on Cocknet, a user just has to have their money on the C chain, connect to the C chain, then they just click buttons on the C chain. You don't have to like export over to Cocknet, switch networks, import, accept the import, stake, approve the new token, right? There's like literally none of that. The experience is actually really, really, really nice. And I think all the tech is open source and everyone's going to pick it up right away.
To echo Steven's point, I couldn't agree more. I think it's really up to our like infra and tooling builders within our ecosystem to make it feel like a singular chain and to abstract away the multi-chain experience for those users. Tesseract is another team that's doing something similar, in which it's basically a cross-chain DEX aggregator across like all of Avalanche, and it's built directly on top of Avalanche interchain messaging. And I think Eclipse is also doing something similar. And so when we have many of these teams,
Particle Network as well, just Particle Network as well.
Exactly.
They're literally building an AA wallet built on top of it.
And that's something that we're actually funding as well. We're giving grants for infra and tooling builders, especially L1 infra and tooling builders through the Retro 9000 program, the Infra Biddle program, et cetera. And so if builders do want to come to our ecosystem and build just cool infra / tooling for L1s, we're very supportive of doing that because we recognize the problem with Ethereum in terms of bad UX at this point in time and 10 million rollups, it feels like, and kind of hopping between them and how it feels very fragmented. And I think that's something that we want to get ahead of and solve the issue before it becomes a problem, really.
Mm-hmm. Yeah. I think it's also worth mentioning Gogo Pool supports, I believe, 40 L1s at the time of recording from like all types of stages of development, right? And I say this because you guys probably have good insight into the progression of app chains. So I want to ask, like, where do you kind of see app chains going in the next few years? And then to what Matt was talking about before is like, what industries or use cases would you all like to kind of see make app chains? Aside from like the obvious ones, but also maybe even the obvious ones of like DeFi, what specifically about DeFi teams would you want them to make an app chain? A lot of questions there. Good luck.
Yeah, just to unpack. We're definitely well over 100 teams that we're supporting and working with.
Wow.
And you're right. They cover some pre-seed teams, a lot of seed, a lot of Series A teams, and then a couple teams that are coming in, or not a couple, but a lot of teams are coming in from Web2. So like pretty already established brands that want to get into the crypto game. I think the high-level categories where at least I spend most of my time on, just because I think they're like, these are worth leaning into. AI, DePIN, and political, I think, or politics. These are the three that are really kicking ass. Gaming is still really good, but we've learned as an industry that they're slightly more linear in terms of like, you can't just ship 5 games in a year type of thing. There's definitely a build cycle to it, but gaming is also definitely up there. And then the predominant model that I've seen builders, like the best builders, are naturally gravitating towards is really this hub and spoke model. So I think of a team like Zeta Block. They're a decentralized intelligence L1. So they're following a hub and spoke model where their L1 is the hub, and then they get to spin off a bunch of L1s and even just smart contract apps that live across all of crypto. It doesn't have to be necessarily built on their L1 because of this interoperability piece. But all these different spokes are connected into the L1, and then they're becoming the economic engine for these AI-focused apps and protocols and L1s. And then same thing on the politics side, like we're seeing super PACs are reaching out, and they don't use the word hub and spoke, but that's basically where things are headed, to be honest. So I think that's really the special superpower of these L1s, is that nowhere else is there technology where I can have a public database and then just have everyone connect to this public database, this decentralized ledger. And then you have the tokenomics on top of that. There's a nice flywheel there. And because of specifically Avalanche architecture, the interoperability piece is enshrined into everything that you do. And you have the C chain as an amazing on-ramp and liquidity hub.
I'm glad you brought up the hub and smoke model, Steven, because we've seen that the past year and a half just continue to get replicated across many different dApps. So I think Dexalot kind of pioneered this because now they're on Arbitrum, Base, C-Chain, etc. And we've seen more dApps kind of do the exact same model. Folks Finance actually doesn't have their own Avalanche L1, but they're basically using the C-Chain as their hub because the C-Chain has a lot of native asset issuance. And so it has native USDC, Tether, avUSD from Agora, et cetera. And because of that and how decentralized the C-Chain is, they felt comfortable using that as their hub chain, especially now that C-Chain gas fees are lower. But I think the hub and spoke model is something that we're going to continue to see more and more of just because it makes a lot of sense to kind of gain product market fit across many permissionless chains, but then you can control the whole tech stack and make it cheaper on the back end and have kind of a central point of your own liquidity for that specific dApp. But yeah, in terms of use cases, we've seen a lot, to be honest. Jacquelyn, to your point, I think gaming kind of pioneered Avalanche subnets when they were still called subnets back in the day.
Right.
Grabata launched Swimmer Network, and then DFK had DFK chain. And through that, we've seen a proliferation of gaming chains and some permissioned use cases. Like Intane was the first kind of, I would say, institutional Avalanche L1 or subnet when they first launched. And essentially what Intane was doing was like an asset-backed securities markets subnet. And for them, they really needed the permissioning. They were originally, I think, on Hyperledger Fabric, and they wanted kind of more control in terms of the tech stack and realized the benefits of having their own sovereign L1. So they decided to build their own Avalanche L1. I think it was almost two and a half years ago. But since then, we've seen a variety of bulge bracket banks and brokerages start to experiment, especially in like proof of concept MVP style environments such as Citi, JP Morgan, and a variety of other kind of large TradFi entities. And it seems like Steven's also seeing quite an uptick in terms of like political related Avalanche L1s, probably primarily for government efficiency. Is that kind of what you're seeing, Steven, or what in terms of you're like, what are they reaching out? I don't know if you're like under NDA or anything, but yeah, sorry.
Answer the $1 million question, please. Yeah.
Actually, what we're seeing, the trend here, or rather the value driver of why get into the crypto game, what we're hearing on that side, or at least what these builders are telling us, is that crypto has unique access to a demographic that has proven to actually shift an entire US presidential election. And this demographic has been historically very expensive and very tough to reach. So that's actually where the conversation starts. They're saying like, look, here's where we want to go. Here's our end state, which is to reach this demographic. We think maybe launching a token, but more like having a presence in crypto, getting into the crypto game in some way, shape, or form, is actually like has proven that this works. And then not to throw shade, but now no one trusts Solana anymore. Because everyone, the Melee coin, the Melania coin, overall, everyone was like, Trump coin was cool. Like, that's fuck yeah, go America. But then Melania, Melee coin, and then this like, who's the other guy? Like Students for Trump coin or whatever.
Oh, okay. Yeah. I remember.
But there's a bunch of bullshit that's like literally just rugs. So now that's a bit of a political pariah of, but they're like, okay, if that doesn't work, then we still need this demographic, and crypto is still a great technology to get in front of these people. So how do we do this? And then Avalanche, because of all of the amazing institutional deals that Matt was just talking about, Avalanche is like, from what I can tell right now, like we're like top 3 in people being considered consistently in the top 3 names. So it's pretty interesting.
Yeah, pretty good. Rhett, what about on the DeFi side? What are you kind of hoping to see for use cases on the app chains?
Yeah, so I think the level of composability matters more for some applications than others. And so I don't think general purpose chains will go away. There's some really nice things about, certain applications having access to like flash loans from another app, for example, that you need to be able to do certain things within a single block. So I think those will stick around. I think the biggest thing will be expansion in the derivatives sector. So perps are the biggest kind of derivatives use case so far. We haven't seen it. We've seen some teams work on things like options. They haven't gotten a ton of traction yet. I think some of these other types of derivatives, there's some opportunity to build some big winners within, we'll call it non-perps derivatives. So I think there's probably something there. So I kind of see both. The other trend that I see is for those that do build app chains, they may end up expanding to more general purpose over time. So Hyperliquid began as just a perps chain, but soon there will be the opportunity for others to build on top of them. So I think you could see it go in the other direction too, where someone comes and builds an app chain, gets a lot of success in users, and then they turn their chain general purpose to allow for an expansion of their services.
Mm-hmm.
For a while there, I thought we'd see more adoption of options protocols, especially like on-chain options. But as of the past 6 months to a year, I think because of the like ETFs now getting options regarding Bitcoin, I think the ETH ETF now has options as well in terms of just like TradFi venues. I think it made it a little bit tough for the on-chain options protocols because the best liquidity is always going to be the TradFi venues, unfortunately, just because they have all the money still. But yeah, that's something that I personally also agree that we need to see more teams building on-chain options. And with that, I think we could see like some more advanced structured products taking place as well.
Mm-hmm. Yeah. I want to kind of shift gears and maybe talk a bit more about like real world assets, stablecoins, utility on that front. Playing off like the DeFi conversation before, Steven talked about the meme coin epidemic. I could probably call it an epidemic at this point. But I think there's also fatigue on that front. And like, sure, some of them will still proliferate, grow, or exist. I think there's communities backing them. And, I have some meme coins myself. But I think the attention could shift away from meme coins, which has been arguably one of the biggest themes in this market cycle, and into maybe more real world utility. I'm not sure if you guys are also feeling the same way. And if so, like what aspects of maybe the DeFi sector do you see really gaining retention from the community?
I think stablecoins are, I think, pretty obviously the biggest use case in all of crypto is from the kind of application side. I think there's a few reasons why those are so beneficial. One, it gives access to dollars to people in other jurisdictions outside of the US. You see really high adoption of stablecoins in places that there's like high inflation in their country. So they want to be able to escape to a currency that is stronger. There's, I think, a lot of benefits with respect to cross-border transacting as well. If I have a friend in a different part of the world that I need to send dollars to, stablecoins are extremely more convenient than trying to do some, bank transfer. So that's a big thing. There are people in a lot of parts of the world that are already using stablecoins for various payments. So you can buy coffee in Turkey with USDT right now in most coffee shops. I even saw that Starlink, since they're in many countries and they don't want to deal with FX risk, et cetera, they are emphasizing stablecoin payments. It allows them to get dollar payments, around the world with an easy way to kind of claw those back into their balance sheet. So I think there's some interesting things there. The part that we're focused on is kind of giving people, call it an on-chain savings account, so yield-bearing dollars. That's been a huge area of growth for the stablecoin space. So Athena has been a big winner so far there. We see a lot of these, what I call RWA stables, which are kind of call it a stable coin backed by treasuries that passes through the treasury yield. There's several of those that are interesting: Agora, Ondo, Mountain, and some others. And then ours, Avant is obviously yield coming from more on-chain sorts of sources. But these, it's stable coins for payments, and then also stable coins as a savings account, I think are both like pretty high interest globally.
Mm-hmm.
Rhett, are you allowed to leak a little bit of alpha for our listeners in terms of the yield-bearing Bitcoin you guys are thinking about building?
Yeah, avUSD is intended to be the best risk-adjusted yielding on-chain dollar, and we think that something similar for other on-chain assets is really useful as well. And so avBTC is something that we see a lot of interest in, and we have a lot of interest in it as well. And so what you'll probably see coming soon is Avant's avBTC, where you're a Bitcoin holder and you just want diversified yield on your Bitcoin. You can just park it in avBTC and stake it and get Bitcoin plus yield. So we think that these other yield-bearing assets are pretty interesting as well. So yeah, Bitcoin is one that there's a lot of interest in, we found, and then there's some other think some of the other blue chips like ETH, AVAX, et cetera, that we think will be pretty interesting for a lot of users. Even really like high, expert DeFi degens. Eventually, many people will burn out of seeking yield on asset of their choice. So being able to park it in a single asset, and then you get diversified yield under the hood, and that work is done for you, is just like a kind of a convenient way to capture good yield.
Yeah, Rhett, maybe building off of that, I feel like yield has also been a very hot topic and or element for people within the DeFi space. Why do you think on-chain yield is becoming more popular? And then can you kind of like break down Avant's yield model and why it could appeal to a larger group? Do you hate your PR firm? Then listen up, because this ad is for you. This episode is sponsored by 72B, a boutique public affairs firm founded by a former Coinbase comms manager. If you're sick of your toxic relationship with your public relations firm, break up with your agency and get better issue positioning, executive profile building, and more with 72B. Check them out at 72b.io.
Yeah, I think, having a savings account and, taking your dollars and being able to not get debased relative to inflation over time is just something that's always been interesting to people everywhere. Right. On-chain yield tends to be stronger than yield you can get elsewhere. So if you have a high yield savings account, the actual yield you'll get is a lot less than the on-chain yield. I think there's a whole bunch of reasons for that. One just is that, as a newer industry, there's some inefficiencies that just have not worked themselves out yet. And so many of the people who are in crypto now tend to be biased long crypto. It's kind of like if you're anti-crypto, you don't play. And if you're pro-crypto, then you're long. What that means is like derivatives funding rates, which is one source of yield for avUSD, tend to bias positive. So that's one of many reasons, I think. Over time, traditional finance yields and DeFi yields should converge more, but I think there'll be a persistent gap there. So one, I think, is people just want yield on their dollars to protect them against inflation, and on-chain dollar yield is better than traditional finance dollar yield for the most part. So I think that's, maybe some pretty obvious stuff, not a lot of deep insight there. Were you asking what the source of yield was, or did I mishear that?
Yeah, or like kind of the yield model and like how it appeals to maybe a bigger group.
Yeah, so, Avant's yield model is, I guess,
can I follow up a question on that, just because I'm curious? And who has this problem and how big is the problem?
Good question.
Good. Yeah, that's a very good question. So I think the future size of the market is enormous, because if you look at traditional finance, there is like an unbelievably large amount of dollar denominated assets that are seeking good risk adjusted yield. So you look at like all the bond markets and money markets and et cetera. There's like very, that's enormous. And then if you just look at individuals, most people around the globe have some dollars, even non-US. Lots of people have dollars and having some interest rate on those dollars is really useful. So I think it's one of the world's biggest markets. Our approach to yield is, our goal is to give on-chain good risk-adjusted yield. So, avUSD is minted from USDC, and then that goes into a diversified basket of on-chain yield-generating strategies. One common on-chain yield-generating strategy is they call it the carry trade. So you'll hold a volatile asset, ETH, Bitcoin, AVAX, SOL. Maybe generate some yield on it. There's different ways to do that, like staking those assets. And then you net out that exposure by betting against that asset on a derivatives exchange. And often you get paid to do so. So those two, net out to dollar neutral, and then have some yield. That's a common strategy. Another thing you can do is just lend stablecoins on a lending market. And if people really want to borrow a lot because they're doing certain things, sometimes those lending rates can be high. There's a number of others. So, the USDC that is used in avUSD goes into like a diversified basket of these strategies. And then you want high diversification so that if there is an exploit experience or something like that, the potential loss is low. And then Avant also has a reserve fund in the event that there are losses, that it can cover those losses. So there's a lot more to those strategies, but those are some of the basics. And I think part of the source of yield too, frankly, and this I don't think will persist forever, but as chains and applications, et cetera, are going live, and there's still a lot of that right now, many of them incentivize people to come use their things. And so, maybe there's a derivatives exchange where you are already naturally getting paid to go short for that carry trade, but then maybe they're also handing out some of their token to attract users. And so that is also part of the source of yield. I think that persists for several years, but probably is not going to be a major part of the source of yield, 20 years in the future.
Mm-hmm. Yeah, that makes sense. I think in regards to avUSD and savUSD, as well as the Bitcoin yield option, how do you see that fitting into Avalanche's broader DeFi landscape and kind of scaling the network too?
Yeah, good question. So yeah, for those who have stablecoins, it's a great place to get a savings rate. So that's one obvious thing. It can plug into the rest of DeFi in some really positive ways. So we're very friendly to others. So stablecoins love to build liquidity against each other. It helps stabilize each other. So we're very open to building liquidity on decentralized exchanges against other stablecoins and non-stablecoins, any asset. So it's a really good base pairing asset on decentralized exchanges. It can be a great asset to borrow. The avUSD can be a great asset to borrow on lending markets, and staked avUSD can be a great asset to use as collateral on lending markets. So we expect that to be a big future place where you see a lot of AV assets accrue to. We currently don't have any lending market integrations. We're working on a few, but I expect that to be, like, if you look at where the avUSD gets parked, a lot of it will be on lending markets, I think. Where else? There's some interesting things you can do with yield trading. Just to call out StableJack, they actually have a staked avUSD market where you can either take fixed yield or variable yield. And so this gives people an opportunity to, if you have an opinion, hey, I think interest rates are going to be going up for XYZ reason, I can take the variable yield side, or if I think things will collapse, I can take the fixed yield side, or, mitigate some of my risk there. So these yield trading markets are an interesting thing. One thing that I would like to see is places like betting markets, or on-chain games, things like off the grid, et cetera. We think that avUSD is a great asset to use as for payments and collateral and things like that. Those are not integrations we have just yet, but we think that there's a really good use case there. So, if you see on-chain, future on-chain prediction markets using avUSD, et cetera, that would be, we think, a big win. So those are some of the, I think, future opportunities. Right now, it's hold it as your savings account, or go use it on a decentralized exchange, or go kind of speculate on where you think the interest rates will go on StableJack.
Mm-hmm.
I think that's really interesting, the StableJack part, because then you basically can hedge depending on if you think the market's going to be bullish or not. Meaning, if the market's going to be bullish, more people are going to want to long. Therefore, you want to take the variable side, because then yields will go up in terms of Avant in this case. And then if you think we're going to be bearish, unfortunately, you can just hedge your risk there and get fixed yield over time, which is super interesting.
That's also, one really.
I was going to say, you could also eventually use like staked avUSD as a staking token for an Avalanche L1. Like, I wonder if you could basically get yield from people paying gas as well. Like, that might be an interesting kind of new utility if you guys ever decide to launch your own L1, or if a team ever wants to just have like savUSD be like their staking or validator token. So.
Yeah, so staked or restaked avUSD, or staked avUSD could be interesting in the sense that, like, that your security budget is more stable than with a volatile token. So there's some interesting things there. But on your point, not financial advice, but yields do correlate to the market generally. And so, yeah, that's one great way to express hey, I think the market's going to flip bullish. Then you would go take the variable yield side on that stable jack market. Oh, I think the market's going to go really bearish. You go take the fixed yield part. Again, I'm not telling people what they should be doing with their money, but that's generally speaking, yields on stables go up when the market is more bullish.
Mm-hmm. Are there any specific areas that you guys think will expand DeFi capabilities on Avalanche, maybe like within this coming quarter or even next few months, 6 months? What are you tracking and thinking about on that front?
On my side, and then to you, Rhett, on my side, I think there's an emerging asset class of network tokens, of L1 tokens. So people are looking for something new to financialize that aren't meme coins. I think these L1 tokens are ripe for that, quite honestly. I think they're a completely different value proposition, completely different asset class, but they can look and feel like a meme coin if the person wants them to. But probably most importantly, there's actual sustainability around these coins because it can validate a network, and then that validator can accrue value across the lifecycle of the network. So I think and this can only happen on Avalanche, but the next novel new push of DeFi is going to be creating L1 DeFi.
I think that's solid. I think some areas that already exist that I expect to grow a lot is real world assets. So things like bonds or bond-backed stablecoins, things like that, I think will grow quite a bit. I'm pretty bullish on also the expansion of these yield trading and points trading markets. I called out Stablejack. Pendle, if people are familiar, has been one of the biggest success stories of the last few years. People are really interested in trading yield and trading points and these sorts of things. New things, I would just say maybe more derivatives, but those sometimes can take a minute. So I don't know if there's going to be some big derivatives breakthrough like next month or something. But I think that's just an area. Like if you look at traditional financial markets, the derivatives markets are much larger than basically everything else, and I think that crypto will reflect that over the long run.
Mm-hmm. What about for institutions getting involved on Avalanche? Like what role will they really play? I mean, they're already involved with Avalanche, but I think looking to the future.
Yeah, this is a good question.
Go ahead, Matt.
I think a lot of it depends on like their compliance teams and how permissionless they're allowed to be in terms of interactions, whether it be like the carry rule in terms of who they can interact with and only being able to interact with like KYC'd entities on the other side of the equation. I think we're going to see some pretty cool permissioned L1s coming out here in the next like 3 to 6 months, or at least announced, that will open people's eyes to the capabilities that Avalanche can provide to institutions. The initial like Evergreen subnets back in the day and Spruce, I think, had the right idea on that front about how having like a semi-walled garden environment for these institutions makes the most sense in terms of ensuring that their compliance teams are okay with them interacting in kind of a composable environment, just because then if everyone is KYC'd within that walled garden environment, they feel more comfortable on that side of the equation. But in terms of just like tokenized assets more holistically, I think Rhett's 100% correct here, in which we're seeing like tokenized short duration treasuries, money market funds, fractionalized real estate, even equities. And we're going to see more and more of that, probably originally starting out on the C chain, but then expanding from there into Avalanche L1s. But yeah, I'm very, very bullish on Avalanche and institutions that kind of merger together.
Generally speaking, I think there's kind of an opportunity for early moving institutionals to arbitrage the difference in what kind of yield you pay on dollars in traditional finance versus what you can get on dollars in crypto. So that could be a big opportunity for growth in the short term. I think not all institutions will play that game in the next few years, but I think there's a few that will.
Yeah. Steven, were you going to say something?
Nope.
Nothing to say. Okay. I think, what?
Not so much. I'm not so much on the institution side. I'm way more interested. Like all my minutes of every single day is focused on the public blockchain use case. So more permissionless L1s.
Yeah. I think to wrap things up, guys, my last major question that I'm curious about is like, we've talked about a lot of different things on this call, but are there other key areas that you're monitoring too that you think others should pay attention to and look into?
I think something that's interesting is how I would pay close attention to any team launching on Avalanche that is integrating or building on top of the current ShameFi board list. Because every new project that launches, number one priority for them is to build the Diamond Hands community. And then now what the ShameFi stuff has created is, okay, well, here is a public database of everyone that got a pre-sale allocation and didn't touch it. Right? Like here is every single Diamond Handser. It's not even just Avalanche community, but all those people who rotated over from Solana as well. And the opposite. And there's not a public database of all those Solana rotators who sold right away. So for a new project launching, if a project, I guess the takeaway for me is if a project launches and says that they are building on top of the ShameFi board, I would be immediately interested. I'm like, oh, okay, that's interesting. Like, what's going on here?
Yeah.
I guess for me, in the immediate near term, I know behind the scenes there are like 4 or 5 new DeFi protocols probably launching in the next month and a half. And so I would just be open in terms of learning about the new DeFi protocols that are launching and then testing them out oneself with just a small amount of money, like $50, $100, getting used to them. And I think that'll be good for users going forward. There'll be good yield opportunities as well. Some of them might be receiving like boost incentives or something along those lines.
Yeah. Rhett, what do you think?
I think different people are interested in different things. I'm a yield interested person. So the things I pay a lot of attention to are DeFi base yield. Lots of places to look for that. And I mentioned, obviously we do things there. There's other, DeFi platforms that do as well. And then these RWA platforms are going to be offering a totally different source of yield. I think all those are things that I pay the closest attention to right now.
Mm-hmm. Yeah. Amazing. All right, guys. Well, thank you.
What about for you, Jacquelyn? What are the things that you're looking at that we should be paying attention to?
Oh my God, the reverse Uno card right at the end. I'm really big on tokenization. I think it's super interesting. Avalanche obviously has a very big traction for that and scale for it. I think in general, the institutional adoption is intentional and it can't all be at once, kind of to what Matt was saying before about compliance. Every entity has different rules and regulations and et cetera, and internal politics probably. And so it's not going to be a massive avalanche, pun intended. But I think it will be in terms of like capital inflows over time. And like once they're in, personally, I think they're in. And so I think the front of tokenization of assets and making things that weren't previously accessible is a really cool opportunity.
I love it. And last question, am I allowed to ask you what meme coins you're holding?
That's all the time we have for today. Thanks, Steven. I appreciate it. Thanks, Rhett and Matt. You guys were very insightful, very wonderful. And yeah, you could ask me, but I'm going to end the webinar. Thanks, guys.
Thanks so much.